Hello traders, Gary Wagner here. It is 11:15 in Honolulu, 5:15 in New York on Monday, 24th day of June 2024, and this is the evening report for gold and silver. Gold had marginal gains today of $13.20. That is an increase of 0.57%. That's important when we compare that to dollar weakness. Currently, we have the most active August contract fixed at $2,344.40. Gold gained roughly 1/4 of Friday's price decline. An important factor moving gold higher today was dollar weakness, 0.33%. When we compare that to the increase of gold of 0.54%, we can calculate that dollar weakness alone provided 48% of the upside move in gold. Unlike gold, where dollar weakness provided a large part of the gain and traders bidding the precious yellow metal higher provided the remainder, silver did decline on the day, losing 9 cents after falling by 3.92% on Friday. Currently, the most active July contract is fixed at $29.61.5. This first chart is a 30-minute candlestick chart of gold, and I've put it up to illustrate the magnitude and quickness of Friday's fall and the slow and methodical rise throughout the last day of trading, getting back roughly 30% of the drop from 23.82, the high before the drop, to current pricing 23.47. We are looking at a daily candlestick chart of gold. I've just put up two simple trend lines showing that we have had a series of lower highs and a series of higher lows, meaning a compression triangle. I still believe we have major support coming in at around $2,300. We can see that that is formed off of these lows that came in April, as well as above that just recently about the middle of June. Gold is trading overseas, up slightly from the close in New York at 23.4640. This next chart is based on daily data and includes our Elliott wave count along with a stochastic oscillator on the bottom. The reason that I'm using the stochastic oscillator in conjunction with our Elliott wave count is to see if we actually saw the ABC or correction conclude in gold on the 10th of June when it hit a low of 23.02. We have had a series of higher lows, and we can see that at the beginning of June, the stochastic oscillator crossed under 20 and then began to move up. It is now roughly at 46. So unless gold challenges these recent lows, there is a decent probability that we have entered an impulse phase, meaning the bullish component of any price cycle. However, as I state in my opening letter, we have a multitude of reports coming out this week, including the all-important inflation report, the PCE headline and core, and of course the core is the preferred measure by the Federal Reserve to determine inflation. The current forecasts suggest that monthly and annual readings of 0.1% and 2.6% year over year are both respectively lower than April's figures, and that would have a continuation of the recent data suggesting that inflation has once again begun to cool rather than heat up as we saw for the first 3 months of the year. That would bode well for the likelihood of a first rate cut in September, and that would bode well for gold prices. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.